Welcome back to FindYourShoreHome.tv. My name's Ian Lazarus, and I'm your host today. And we're here with John Coneys, and we're going to be talking about mortgages. Welcome to the show, John.
Thanks again, Ian. Thanks for having me back.
And you're now with Superior Mortgage.
Superior Mortgage, yes, out of Hamilton, New Jersey.
And we've been working together for a lot of years, and the programs today seem to be a little bit different than what they've been in the past few years. Why don't you tell us a little bit about what's going on?
Sure. Over the last couple of years, definitely has been, as the mortgage crisis has been in the newspaper and on TV, and the real estate changes in the real estate market have been so published over the last several years, the mortgage market has changed also.
Right.
And that landscape has moved to where some programs that just are not there anymore versus earlier in the decade. Your subprime loans, where you had your high interest rate loans depending on certain credit score criteria, which were available several years ago or before, and a decent part of the marketplace no longer exists.
Right.
And the other program which really isn't there anymore is when people ask about that so-called no-doc loan. The no-doc loan being where we don't verify anything or very little about the buyer's situation. We don't verify their income, don't verify their assets, a no-doc loan. They are probably not there or do not exist anymore in this environment.
The joke
also
was that was what we called a breather loan. As long as
a
you
liar
were breathing.
loan. You hear people jokingly say that it's called a liar loan.
Right.
What you do have, occasionally, depending on the situations, you might still find, depending on who the lender is, a stated income, where the buyer is stating their income and in certain credit score thresholds, usually in the upper 700s, mid to upper 700s, and depending on the amount of reserves that they had, extra money not used in the transaction saved up, that in certain circles or situations you could potentially do a stated income loan. In those cases, at the time of this taping, you're probably looking at 30% or more down quite often.
Okay.
Otherwise, with that end out of the arena, it comes down to, are we documenting income and where the credit score is? And we did a segment on credit score before, but if we can document your income via your W-2 and your tax returns, because tax returns are looked at much more often today than just the W-2. People can actually still buy their house. You can get a house for 20% on a second home quite often. And if you're buying an owner-occupied property, depending on where you're looking, you might need as little as only 3.5% down.
Right, and those are some government programs.
That's right. That's right.
It seems like that's what's happening a lot.
A lot of your first-time home buyers that if they're buying their first house,
Right.
or assuming it's an owner-occupied property, then there are programs out there via an FHA loan. If you're a veteran, a VA loan, where your down payment could be as little as 3.5% down on the FHA side, and on a VA loan, 100% financing. Wow. And that has not changed. That's always been there. That's been there for the marketplace. That end of the marketplace has not changed as far as available programs.
And one other program that we look at down here to short because of the pricing are some of these jumbos.
Yes.
Have the thresholds changed in regard to the price more?
Where you see it more on the jumbo side is your loan to values. At times your down payments would have to be greater. So a conforming loan limit is $417,000. You start borrowing more than that, then your down payment requirements, depending on how much you're borrowing, might be greater. So where before you could sometimes put down 5 or 10% several years ago, today is 20% or more down.
Right.
So quite often you might see, depending on that threshold, between $417,000 and $1 million or more than $1 million as far as a loan amount, you might need to put between 20 and 30% down.
It seemed that they were talking about raising the 417 number because of different areas in the country that are higher price homes.
Yes, and I believe for Cape May County, I believe that the limit for the Fannie Mae jumbo loan is in the 480s as a loan amount. Okay. So in that case, you're still being considered a Fannie Mae loan if you're borrowing up to the 480 number. I think it's 487.5. Okay. From there, then you would fall into above that would be the jumbo category.
Okay. Well, that's good to know because I didn't really know.
The programs are there. It means when people, if you have good credit score, documenting your income that can be supported via tax returns. The programs are no different than they were in that regard than a couple of years ago. You'd be buying the house the exact same way today as you would have a couple of years ago.
Well, that's some great information that we can give to our viewers today. I want to thank you for coming on the show.
Thank you.
And thanks again, and we'll see you soon. Thanks.